The following is a presentation of TFNN. Live at TFNN, the Money Masters. Now, your Money Masters, Tom O'Brien and Steve Rhodes.
Welcome to the Money Masters Show, folks. Steve Rhodes here. Tom is out for the day. He's traveling out to the West Coast. So he'll be at the Gold Show in San Francisco. I believe that is tomorrow. So if you're out in that area, you certainly want to stop in and give him a hug. You know, you might want to consider giving him I don't know if tomorrow you might want to be bringing your bullhorns along, give him a bull hug out there. Be careful. All right, now we've got the Dow up 16 points, S&P up 3, Composite down 53 cents, small caps off 25. Popping to the upside, Toyota Motor Corporation leading the charge up $3.50. They're up $4.70. You got PetSmart right behind them, up $3 and change. That's up 5%. NetApp up 10%. Cameron International up 4%. Pioneer Natural Resources up a couple of bucks. Helmerich and Payne up $2 as well. Leading things to the downside, you've got OC Systems, OSIS happens to be their ticker symbol. They're down 15%. Children's Place Retail down 14%. Poseidon Concepts. Poseidon sinking here this morning, off 56%. I don't see any news on it. It is down $7, down to $5. We'll take a look at that stock chart. Apple down $6 and change. Market is not going to be bouncing without taking Apple along with it. So another bite of Apple. We'll take a look at the Apple chart. We didn't get a chance to do that in the first hour. You've got Regeneron Pharmaceuticals off $5. That's down almost 4%. Transdigm, TDG, down 4%. MasterCard off 1%, down $5. Diamond Foods off 3. Walmart down 3. Back inside its trading range that it broke. That went all the way back to December of 1999 out there. Our call-in number, 877-927-6648. Let's start by taking a look at the S&P. We'll take a look at the S&P cash index, and we'll go over to the ETF. We'll go to the SPY on the daily. Then we'll take a look at the 10-minute on the ETF, as well as the 10-minute on the futures contract. So let's just spend a little time here taking a look at the S&P 500 right now, trading out at 1358.23. What is it trying to do? Well, it has just a little bit lower to push down to get to sweet 618. That would be 1346. So far, the low this morning, 1351.81. We're going to go take, and you can see here the S&P, if you're following along on Tiger TV, maybe you're just listening in on a radio station, perhaps your mobile device. You can always catch an archive of this show on Channel 10. The benefit there, you can replay it. You can take a look at my charts. And if you want to see the charts clear, folks, what you need to do is just come on over and join the Tigers Den. You can join that 30 days, without any cost. You might put a credit card down, but you're not charged until, I believe, after the 30th day. But then you can get some real clear vision of the charts out there. Again, if we take a look at the S&P 500, you can see sweet 618 in that 1346 level here. We'll see what kind of candle we get here right now. The bears really have been in control ever since the October 18th level. The first bounce that I tried to play, which was 2 days ago, that did not pan out. But I am getting ready for another one. Why? Because the market has certainly moved into oversold territory. Also, we were taking a look at the weekly charts. We'll go back and take a look at the weekly charts as well here. You're really up against the wall. You're up against the ideal area to be able to take a trade. It could go either way, but you're up against a wall, ideal spot where your back is up against the wall, and you can put a wide enough stop in there as far as your stop. But intraday, if you get a close below a certain area, you can go ahead and take a loss, and you can flip your position around. So it's nice trading opportunities, quite frankly, that are setting up because of where the market is moving back to, and as we take a look at indicators. The case of the S&P 500 on the daily charts has not been in these oversold conditions since June of 2012, June 4th, 2012 out there. So we will get some kind of relief. It has to relieve itself, maybe another push lower. Those other pushes lower could certainly take it down into the 1326 level, maybe 1312. We've just had the 3 days. Today marks the third day of a set of a lot of things going on in the sky. We started with the new moon solar eclipse combination. That was on Tuesday. Yesterday, you had the moon at perigee. That's when it is the furthest from us. And then today, we've got a 4 planetary index date, a 4 P index date, a 4 Pesavento index date. Speaking of Larry Pesavento, he'll be on today from 12 to 1. It is Thursdays out there. So, pretty nice to have a more than just a technical indicator, the Futures Hour named after you. So today certainly is a P index date. So a whole cluster, as well as coming into these oversold areas, as well as making these A to B equals CD patterns, coming into retracement areas. You got it all out there. And you certainly have the fear, so you don't have a lot of folks running into the store to buy. So trying to time the bottom, not an easy thing to do, but there are certainly ways to do it out there. Just make sure of one thing. Whenever you're trading, always use stops out there. So that's where we're at on the S&P 500 today on the daily chart. Not giving you much in the way of any type of indication. Let's switch over to the S&P 5, the SPY out here. We can see on the SPY that what has completed out here is a 1 to 2 A to B equals CD. If you have timing the trade or the art of timing the trade, I don't know the page number on there, but I guarantee it's written in there that when you do a 1 to 2 A to B equals CD, it's almost always, folks. That means really close to almost always. It indicates you're going to see some type of change in trend. That change in trend most certainly can be a sideways move. So now you've got a 1 to 2 A to B equals CD. That 1 to 2 coming off of the high of September 14th on the SPY, 148.11. Your move down, your first move down took you into the low of October 12th out there, out at 142.58. Looks like to me it does about a 0.618 retracement. However, price moving along the inside, still on the inside. So we can see fear is a greater source of emotion than certainly greed out here. And you can see the fear. It's written all over inside these candles out here. And so why do I say that? Well, if you just take a look at that move down that C to D leg, folks, that is very powerful out there, much more powerful than really the first move down. Now, what have the SPYs done? They've come down and tested the low of the swing point from August 2nd. That swing point, 200 million shares out there. Came down with a wide-ranging bar yesterday. The actual low of that swing point happens to be 135.58. You get down there yesterday, 135.62. Oh, those 4 pennies. I looked at that last night, and I'm like, you got to be kidding me. 4 pennies away, doesn't test that swing point, coming into it with volume 191 million shares versus 199. Oh, what are you trying to do with energy being on the inside of this? Are you going to try to blow that away? That was the opportunity that the SPYs had. They didn't take advantage of that opportunity. They were resting just as if they were running a race out there. But so far, out of the energy to do what they should have done when you get to a swing point like that and you stop just before it and you have all evening to rest, especially when you have, let's see, I don't think, can I name all these things out here? I'll come back and name them in a few minutes out here. And things like scaring everybody about their taxes and not telling you exactly what it's going to result in. All the concerns about the fiscal cliff. Oh, how about, I think we started a war, not we, but there's a kind of a war maybe brewing out in the Middle East out there. That can't be good. Certainly wasn't good for oil prices yesterday. So you had all kinds of opportunities here to stop 4 pennies below before a swing point and try to punch right through it. It hasn't done that. There is some other areas of support here. You've got some gaps. Still open. July 25th would be one of them. The high of that, 133.25. But what has occurred, a 1 to 2, A to B equals CD. You've now tested the low, 135.58. So far, the SPYs have gotten down to 135.52. Have rejected that area. 35 million shares, though. 35 million shares. You do the math. There's 6.5 hours of trading. We've only done 45 minutes of trading. Just multiply that times 6. You get about 190 million shares. So still coming in a bit hot. Now you have volume typically front-loaded and back-loaded in the trading session. So it's going to be this middle hamburger session where we're going to really find out what's going on volume-wise. So speaking of that, let's just simply go over to the 10-minute chart out here. Let's see what we've got from the open. You can see the SPYs here moving. Let me see. This is moving down here this morning. Again, it's a 10-minute chart out here versus the daily that we were looking at. Let me just refresh my screen here. Make sure that I've got all active and live data as this refreshes. There we go. That's what I thought we were looking for. So now we're taking a look at the SPYs here. We've got a low that came in yesterday at 4 p.m. into that close. That volume out there, 14 million shares. It was tested here just 10 minutes ago at 10:10. 10 million shares, testing that low with 14 million shares. That's a possible rejection of price and volume of a swing point. Again, intraday, just a 10-minute chart out here. You want to see more follow-through than just that one candle formation out there. However, it is something to be watching. So that is on the daily. Now, let's go over to, that's not on the daily, that's on the 10-minute chart. So that's on the 10-minute chart. Now let's go over to the 10-minute chart on the ES Mini and see what we have out here. On the ES Mini and the 10-minute chart, you can see, again, they've got in the bottom quadrant, I've got that relative strength indicator out there, and you want to be paying attention to it, especially if you're trying to get in on a trade and the market is moving up and you're wondering, hey, where is it that I should enter? And should I chase this thing? Maybe you've caught yourself buying things, right at the high, and then all of a sudden it pulls back. Well, what you can do is just simply utilize this indicator to get an idea on that intraday level whether or not you've gotten to an area where you're overbought. And if you are, let it work its way off. And does that happen? Well, I don't know. Just take a look at the indicator right here. Just look at it as it was making a low, and it was an oversold condition back at the 4 p.m. session. This is, again, 10-minute chart. This is the ES Mini. 10-minute chart at the time frame. So at 4 o'clock on November the 14th. You can see you get down into this little extreme area here. That's below the 30 and 20 level. It gets down there. You get a little hammer candle. That's what you like to see the bulls are in control. Where is this going to bounce to? Where is this going to end up making a high? Oh, geez, it happens to make a high coming into the 6 a.m. time frame on November 15th as it works its way up to the overbought level. Gets up there, you get a little bearish engulfing candle. What's it do? Moves on down to where? Moves on down to where it gets a little bit in the oversold level. Then what's it do? Moves its way back up there. How about this simply for an indicator when you're going to buy on an intraday basis, folks? Don't buy when it's up at the highs. Why? Because it's going to pull back or move sideways. And if it moves sideways and it works its way up, well, you'll see that, but maybe it's going to pull back and you can buy it at a little bit lower price. That's how you would use this type of indicator on an intraday basis. So now what are we seeing? Seeing a little bullish engulfing candle right here. Again, we're looking at a 10-minute chart. Just as you come into the 9 o'clock time frame, when did that happen? Right after you got into oversold territory. Now it's just moving its way up. Looks to me like the ES Mini on the 10-minute chart should move its way higher. What's going to happen when it gets up in that 70 to 80 range? Most certainly either pull back or work its way off to the in a sideways move out there. How about that for a little bit of education and a lesson out there? So that's on our ES Mini. Let's go take a look at some of these stocks here that are popping and dropping. We'll do that when we get back from the break. 877-927-6648. Gold was getting smacked around this morning, down $17 right now. Silver off 42 cents.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Masters Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. And, before we went to break, we were taking a look at the SPYs, at the S&P, at the ES Mini. The last thing I was showing you was the use of the relative strength indicator out there. And I know a few of you were saying, well, Steve, does that really work? Does it work on all time frames? Does it work on currencies? Does it work on commodities? Does it work on the bond market? Well, let's go find out. Here we're taking a look at the Japanese yen having a strong day. Now, in this case here, you're looking at the U.S. dollar versus the Japanese yen. As you see the candles moving upward, what it's telling you that the yen is getting weaker against the U.S. dollar. So the U.S. dollar getting stronger out there, having a heck of a to B equals CD. Now, what it is doing, we're looking at a larger A to B equals CD that's underway. It's going to take the Japanese yen up into the $82 area, at least the $82 area. May run all the way up to the 84 level because it's only done a 0.382 retracement. And the move off of that C point is massive. Take massive action. It's explosive. It's explosive and massive. Two wide-ranging bars. Hasn't seen two wide-ranging bars like that in quite some time out there. Now, let's say you were going to take we wanted to take a long position on the yen. Would now be the time to do it? No, of course not. On this currency pair, I should say. So weak yen. No, it would not. Now, what the yen has done, you can see it's done a 0.618 retracement from the highs. Now, the highs we're taking a look at are March 15th when it was out at the $84 level, all the way down to the low that was put in here on September the 13th. So from high to low, 0.618 is 81.48. and where the Japanese yen got to was 81.45. I don't know, folks. Do you think maybe you ought to have retracement rulers when you are between swing points when you're doing some chart analysis? I think that you should out there. So it's gotten to that first level, supposed to pause. As it gets up there, you can see also hitting the top of that relative strength area. So it's an area where it should pull back. Of course, you need to go down into an intraday chart out here. Take a look at the Japanese yen as it's been in oversold or overbought conditions, even going all the way back to March 15th. So it's getting into that extreme area. What's it do? Starts pulling back. The last time that it got down into an area where it was truly oversold back in June 1st of 2012. Look at that. What does it do? It moves off of that level, comes back down, tests that again here back in the July time frame. Last time that it was down in that area happened to be when it made its lows in September out there. Does it work on all products? It does. Does it work in bonds? Well, I don't know. Let's go look at the bond market. In fact, we should look at the bond market anyways. Let's take a look at the 30-year Treasury, trading out at 151.31, having made an A to B equals CD. Well, look at that RSI indicator up there towards that overbought level. Hasn't been up that high, quite frankly. If we take a look at the reading right now, well, let me put the reading panel on the screen here. That would be good if I asked the question. So in the 66 level, so it's in the 66 level. Last time that it was up at that high was back at about the 62 level when it made a high September 14th. So you've completed a pattern out here. It doesn't want to really give up much here. You've got a very narrow-bodied candle yesterday as it makes that 1-to-1 A to B equals CD. How many narrow bars have you had up here? 1, 2, 3, 4, 5. Losing some energy to the upside. That's what the candles are saying as it's into this area here where it is overbought. Now, how do you work off overbought conditions, folks? That's right. You either move sideways, and that's what it's doing, these low bars here, or you start to pull back. But if you're in the bond trade, you should be careful. You've completed some patterns out there, and you know that you are up, or just make sure you tighten up your stop on the trade. That's at least what I would do out there. Let's go take a look at an equity. So let's go look at an equity. We haven't done this just to round things up. Let's go take a look at everybody's favorite equity, not necessarily everybody's favorite equity, but one that we certainly have to be paying attention to, and that is Apple, because the market is not going to go for any kind of a bounce without Apple coming along. So let's go take a look at the Apple chart, see what Apple is doing out here. Let me widen this on the screen here. It'll take me just another moment. You've got Apple trading out at 531.64 right now. So Apple trading below its most recent swing point low from November the 9th out there. That happened to be 533.72. Now, let's just go ahead and delete a few things off of the screen here on Apple. And let's take a look at what Apple is actually doing. So you got Apple here taking on the, we'll just dissect this. Apple taking on the swing point lows from May 18th out there. That low, 528.66. Let's see. Let's draw a line across here just so we can pay attention to it. Let's see if Apple actually did hit that here this morning. So, again, the number is 528.66. This morning has gotten down to a low of 529.30. Still not just there. Apple wants at least another push lower. Volume yesterday on Apple, 17 million shares, going against the swing point with 26 million shares. Something to think about. 877-927-6640. We'll be right back.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. The Dow up 9 points right now. S&P's up 3. Before we went to break, we were taking a look at Apple. So let's continue our analysis of Apple out here, see what we can learn from the Apple tree. So one, Apple moving down into the swing point lows here of May 18th, 2012. Again, that low, 528.66. In fact, it's still inside that swing. I'm going to draw a line across the swing point, because here's a possible way that you could play this little bounce. You want to use this certainly as an indicator for a signal, because you want to wait for Apple to reject some lower prices and truly start moving up with some type of conviction. Now, as we take a look at the Apple chart, the two red lines, the horizontal lines going across my screen here on the upper portion of the chart, that is the swing point from May 18th. So I've got the high and the low marked off there. Apple has not tested low, but what we do know yesterday was coming in with a volume of only 17 million shares. So we've been trading for just over an hour, 7.7 million shares. So it's got more volume here today. So we'll go down into an intraday chart and take a look at it. But if you do get a rejection of price, that would be a test of, it would be Apple getting down to 528.66, and I think it would actually push down a little bit lower than that. A little exhaustion there, but below 5, even if it got to 528.65, that's fine. Close back above 528.66, that would be a rejection of price and potentially volume if it's less than 26 million shares out there. So it's done. What did I say? 7 million shares so far. So it's going to have volume's going to have to slow down in this equity here. But you would have then a rejection of price and potentially volume out there. Would that be a reason to buy? No. That you need more signals than that. In fact, what you'd like to see Apple do is clear the swing point. You'd like to see it clear and get up above 543.41. How could you play it? You could play it where you used a buy stop in there when it got up above that level, so it would pick you up and go along. But I wouldn't play it off of the bottom. If we take a look at A to B equals CD patterns, and of course, if you reject the area with volume of more than, I think it was 27 million shares or so, even though you close back up inside there, that's only a rejection of the swing point on price. It's not on volume, and says it'll go back down there one more time and test it. You can also see on the A to B equals CD pattern on the way down, Apple right now in between floors. The 1 to 1.618 level takes you into the 530, looks like about 530.51 area. So it would be actually nice. Is it 530, 520, 520.40 is what we'll call it. So it'd be nice to see it, boom, punch right down there, get back up above the swing point from May the 18th, and do it all on lighter volume. That would be pretty nice. Now, what we can also take a look at on Apple is take a look at how it has gotten down. We've been taking a look at the relative strength indicator, made very, very popular by James J. Wells Wilder. And so it's a great indicator out here. Helps you to understand when the market is certainly expanded. So even if you aren't familiar with A to B equals CD patterns, this is an indicator that you can find in any trading system out there. Now, I use it a different way, but I still use it to identify areas where the market has gotten into an oversold or an overbought condition. And what you can do is on any of the charts that you trade, whatever it is, just simply apply the indicator and go back and forth in history and take a look at it. Take a look as it approaches the upper levels of the overbought area. Does it start to make reversals? That's where you'd want to understand candle signals that are out there. That's important. Take a look at Apple as it made its highs. Where was it getting up to? The upper parts of its range. Now you're back into the low area. Take a look at when Apple made this little island reversal back here, back in the time frame of July 26. It was out there towards lows. It really hit the lows right in the area that we're talking about right now. So take a look at some similarities. When Apple last made a big move up, it happened to be off of the May 18 time frame when relative strength got down into that oversold condition. Also, you saw a move. Let's take a look at off of the bottoms here. You can take a look as I'm just simply going back. Right now we're into the September 2011 time frame. How about right here when you actually hit it? When you hit it was back, not you, but Apple hit it back in the June 20th, 2011 time frame. So how important is it to be able to watch what the breathing pattern, the EKG is what I'll call. We're just looking right now at bottoms and what has occurred out here. Take a look back in August of 2010 out there as it hit the level that we're at right now. Actually, we're a little bit below that. As I pull this back here, take a look when you've got to a real oversold condition back here in 2008, in October of 2008. Certainly consolidated sideways. When you get to these areas here, you're either to work it off, you're going to move sideways, or you're going to bounce higher. And so what Apple did for a period from October of 2008 really into the March of 2009, just simply went ahead and worked sideways. In fact, what it really did was it created a real nice Gartley buy pattern. Produced that Gartley buy pattern right here. You got to love it. So that Gartley buy pattern, or at least I was loving it. Back here is the Gartley buy pattern that this thing made. It was a beautiful thing. Now, if I just keep going back, so now we're back into the 2008, but I think you get the picture. Hopefully I have proven the point that this is something that you want to be paying attention to. Now let's go and take a look at Apple on the intraday chart. So let's go into the 10-minute chart and see what it is that we can learn here. And certainly one of the things you can learn is any of the bounces that we've had. One of the areas where you've seen a turn on these bounces when Apple has gotten into where? Gotten up towards the overbought area. Just take a look at that as it's made some moves, either working itself off sideways, trying to tackle it again, pulling back. So on the intraday chart here, we can see volume very high here since the open. The open is right here at 940. So at 940, you had 1.4 million shares. Then you had 957, 1.2 million shares. Again, we're just looking at the 10-minute charts. Still 1 million shares about every 10 minutes now. Volume starting to wane just a little bit. The last 10-minute bar was 891,000 shares out there. No real bullish signs yet. So the bulls in Apple, they tried to show up here at 1010 and at 1020. Looks to me like a little bit of a sucker punch as Apple moved back down out here. So Apple is one of those charts that we want to be paying attention to for signals in the marketplace. Let's go take a look at some of the spider ETFs out here. Let's go take a look at the financial sector. See how the financial sector has been working through this little down thrust here. Financial sector, let's go take a look at its retracement level off of the June 4th level. The low out there would be $13.30, makes a high with some conviction, with some real conviction here. However, that high was tested. That's the September 14th level, 122 million shares that were up there. It was tested, unfortunately, with 51 million shares. So tested with less than 50% of the volume. That set it back down into the sideways consolidation range, which it broke through, and it did that. Broke through it on the 8th of November out there. Came back, tried to get back inside there on November 13th, but you could see that candle out there on November 13th. You saw that the bulls really took over. Just take a look at that long upper shadow out there. Tells you that the bears, I say bulls, tells you that the bears were in control as it tried to get back inside that sideways consolidation trading range. Yesterday, most certainly, the bulls in control, the bears in control. However, if you take a look at the retracement, really not too damaged out there. Only just a little bit over a 0.382 retracement on the XLF, which is the weakest sector with inside the S&P 500. One of the top three weighting structures inside there, but still the weakest sector with inside there. So not too bad. You see that the XLF has not even gotten back to test the resistance line of the uptrend line that came off of the October 4th level out there. So it does make you say, something to think about, because it has not been taken apart, at least not just yet out there. So on the XLF, not looking too shabby today, having just if the candle were to close here right now, what this would tell you is just simply it would be a bullish harami, which just tells you that the market is a pause. So it's not a turn signal by any stretch of the imagination. Let's go take a look at the energy sector, then we'll take a look at the tech sector. Of course, we know the tech sector getting hammered out here. Let's take a look at the energy sector, though, the XLE. As we take a look at this, completed a 1 to 1.272 A to B equals CD down. It does that yesterday, gets down to a low of 68.38. The price projection on that was 68.26. What is it doing? Let's go back and take a look at the swing point that it is taking on here. Let's see. Erase some of the lines here so that we're all paying attention to the same area. That's going to be the swing point low right here. It has not gotten down all the way to the August 2nd. So let's go ahead and just like we did in Apple, let's go take a look at the swing point. Let's draw the line across the top. Of course, maybe let's straighten it out here. Across the top and the bottom of the August 2nd level. Now, August 7th, August the 2nd. Let's also draw a line on the volume bar so we can see what kind of volume as the XLE is moving down into that area. So we can see the XLE moving into that area with volume. Yesterday, the volume there was 19 million shares going against 15.4. However, it also stopped right before the swing point out there. So, today it is trying to form, looks like maybe a bullish engulfing candle. It would need to close above the 69.62 level, trade out at 69.04. Let's go up to Cambridge, Massachusetts, to our gal, Kathy. Kathy, thanks for calling. Thanks for holding.
Hi. How are you, Steve?
I am doing just fantastic. Always good to hear your voice. How are you?
Good, thank you.
Yeah.
I wanted to look at Molycorp, but first, if we could look at Freeport again for a second.
Yeah, FCX. Okay.
Yeah, I'm still waiting to get on that one.
Okay. So you take a look at all of the metals equities yesterday getting hammered. So we're taking a look at the breakout gap up that was from September 7th. And the low there was 37.41. And the volume there on that breakout was 39 million shares. Yesterday it closes at 37.41, right on the spot. How does that work?
Right.
Comes back with 15 million shares out there. So that level has held. You're trading at 37.38 right now, but what you've got to do is you've got to wait for some bulls to show up and give some type of bullish candle signal. If it doesn't, then what it's going to do, it's going to come down and it's certainly going to test the gap out here, which is going to be somewhere between 36.73 to to 35.59. What I like about yesterday with the metals market being taken apart, and FCX specifically, is the volume coming back yesterday still didn't exceed the volume from the day where it broke out on September the 6th out there. So it still looks pretty good. We just haven't gotten a signal here. In my opinion, we haven't gotten a good enough signal in order to try to take, a long position. Now, what I also like about it is it's starting to move back into kind of an oversold condition, using the relative strength indicator as one of those out there. So to me, it still looks like a good trade out there.
Okay.
What are your thoughts?
Well, I'm looking at a bull call spread.
Okay.
To try to play it in just for that bounce.
Right. Yeah.
And see what happens with it.
So here's how you play these gaps, okay? Where you can try to put on something like that, or just simply put on a trade. When you see a gap, any gap, especially one like this, you just simply mark the bottom of it, 37.41. And what you want to see is that tested at least 3 separate times. If it holds 3 separate times, what that tells you is that's pretty good support. Doesn't mean that it's not going to get filled at some point in time, but when you can come back and you can test it and you can test on lighter volume, it tells you that that's really a very good support area. Now, I always like to find a bullish sign other than just that in order to go ahead and take a long position. But if you get a test over the course of the next couple of days and it stays above 37.41, then you've gotten a lot of information. Okay.
I thank you very much.
Sure. So you want to take a look at Molycorp, MCP.
Yeah.
Tell us what you're doing out there and how we can help.
I was looking for a long position on this. I mean, it's a rare metals play, but I don't know. I'm this going long anything right now is just ridiculous, I think.
It is hard.
Look, there goes Apple.
It is. Yeah. It is hard to take a. That's right. So
you want to try to bottom feed. You want to try to pick some of these metals up at the bottom. But Tom last night was extremely bearish on the gold stocks and metal stocks.
Well, when you rightfully so, because you had equities that have had a lot of strength, that had a lot of volume all of a sudden come into them. Now, some of it, came in a just short burst of time. So it wasn't as if it was massive selling all day. Volume nonetheless, though. Whether it was Harmony Gold, Gold Fields, Great Panther, you could just tick them off one by one. That's why FCX actually held up pretty well.
Yeah.
In comparison to all of them. Bottom fishing Molycorp, I don't know. The only way to really bottom fish this one is going to be by waiting for some type of sign of strength. Because this one here, there's certainly nobody in this equity that's in the money. As we speak right now, the low is 611 and it's at 624, all-time lows. So it's that one's a little bit more difficult call at this stage.
All right, we'll wait on this one.
Yeah, there's only signs of weakness in this. So that was. That was a stock here. The problem with this equity is this was talked about so much, not for folks like yourself, that have the knowledge that you do. But, there's still folks that actually bought this thing in the $80 level and still have it, and it's at $6, just simply because of all the hype that was out there.
Yep.
All righty?
All right.
You bet.
Good afternoon.
You bet. You too. Have a great day, and happy Thanksgiving if we don't talk before then.
Oh, yes. You too as well.
You bet.
You.
877-927-6648. Dow's off 15. S&P's off 7. We'll be right back, folks.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get
get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I had people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of tfnn.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back to the Money Masters Show, folks. Thanks for being here, and definitely stick around because we got Basil Chapman coming up next from 11 to 12. Then we go out to Tucson, Arizona, to Larry Pesavento, 12 to 1. Daryl Martin back to Dallas, Texas, for Daryl's show from 1 to 2. David White in the house today here from 2 to 3. Ken Shreve out in California, 3 to 4. And the Tom O'Brien show from 4 to 6. What I have up on my screen, if you are watching us on Tiger TV, you're taking a look at the Dow weekly chart. Dow weekly chart showing you the rising price channel that goes all the way back to March 2009. Under attack here, most certainly. Last time the Dow was under attack was the week of September 23rd, 2011. You probably remember the markets were moving down in that August-September level. Of course, the Dow got back up inside that rising channel line out there, was tested again the week of October the 4th out here. So it was really, the week of October the 7th. So it was October 4th where we saw that big test. Now we can see that this week here, the Dow trading at the low of its range, down 20 points right now, out at 12,550, has broken through that rising price channel. What happens if you get a close below it? Well, what you can expect is you can expect a test of it. Likely, that would occur next week. If it does not get back inside that rising price channel, that would set up a real break. More importantly, folks, that would give you the signal. That would give you the signal that the next bear market, the next leg of the bear market is truly underway. We have to wait till tomorrow. We have to wait, to see how this plays out here. But the Dow may be giving you one of the first signals out there to be very, very careful, especially very careful with your long-term funds. Now, back is up against the wall. You've also got the NDX 100. We know Apple is a big piece of this. This is the rising channel lines. You need at least 3 co-located opens and closes. That means it doesn't matter whether it's a close. For example, you can use the close down here of March 5th, 2009, and the open of the week from March 13th. And so it doesn't matter whether it's an open or a close. You want to at least have 3 touch points out there. If we take a look at the NDX 100, the NDX just breaking through it last week and again through it this week with conviction, also at its session lows. The real test comes, folks, when the index tries to get back up inside. If it gets back up inside, it was nothing more than a false break. However, if it doesn't now, and here's the problem. If we take a look at, we've been talking this morning here about utilizing the relative strength indicator out there as a guide, the EKG of the system out here. You can see that, it still has room on the weekly chart. Weekly has more meaning than daily, daily than 30-minute, 30-minute than 10-minute, and, of course, monthly over all of them out there. So on the weekly chart, still has more room to move to the downside before it would get into a oversold condition out here. So really at the precipice, we need to wait to see how tomorrow plays out. If we take a look at the S&P 500, it's really trading right at that line. So we don't have to wait for what may or may not happen with regard to the physical cliff. The market will absolutely tell us, and we can utilize these trend channels out here to help us, guide us. The New York Stock Exchange, the larger breadth of the marketplace, what we can see out here is that in the New York Stock Exchange, it's also up against that area, and it's important here on the New York Stock Exchange. I just simply showed you the channel lines out here, and I'll just bring it up like this. You don't have to worry. And if we take a look at the channel lines from 2003 all the way up to the highs that were put in October of 2007, you can see that the channel line were broken in the January 2008 time frame, just as it's supposed to do, tries to get back up there. Now, it took until May of 2008 for it to try to get back up there and test it, but it will do that. It couldn't, and that really started the waterfall. That started that first leg of that bear market on the New York Stock Exchange. Stay tuned for Basil Chapman. Thanks so much for being here. If you've been with me for 2 hours, thanks so much for doing that. Have a terrific Thursday. I'll look forward to seeing you again soon. Bye-bye now.